Welcome back to the channel. My name is Brad, and today we're going to cover a lot of different things. Roundhill, look at NEOS, GPIX. We're going to talk about a lot of different things and what's going on, and you will not want to miss it. So stick around. So my name is Brad, and we're just going to go ahead and get into this. I'm retired now for officially 1 year. Yay me! Let's go ahead and look at GPIX. GPIX and GPIQ. Currently, you can see the percentage of the portfolio they're writing on. They've kind of leveled out right around that 35% for GPIX, and GPIQ is about 40%. Now, keep in mind, they've had massive inflows. I mean, these guys are over $1 billion in assets in both funds. Not one, not when you add them together, but each one is worth $1 billion. So that's $2 billion just laying around. What's $1 billion between friends? You always can rely on a good joke from Brad. Okay, let's look at NEOS. NEOS right now, this is as of this morning. Hey, the only strike that they've gone through so far is IWMI. That's where they are. You can see where it's at. You can see how much farther they have on each one. Anyway, that is where NEOS is on their calls as of this morning. Next thing I'm going to point out is, hey, the VIX is in contango, and we like contango because that really helps the market be, let's say, a little less volatile, but that VIX is about 16, which is good. Means there are some premiums to be made. We prefer the VIX maybe a little bit closer to 20 to make really good premiums, but 16, I'll take it. But we really like to take contango. Now, market news. NVIDIA market cap approaches $4 trillion. Just thought I'd point that out. And AES has jumped in renewable energy for this whole entire ecosystem of AI. Microsoft, Google, Amazon, BlackRock's global infrastructure partner. You can read it. It's just giving you what the email this morning pointed out, and I thought that those two items were worth mentioning. Now let's go ahead and move on to Roundhill. Roundhill is going to pay you 25 cents, 23 cents, and 26 cents. Well, the premiums they made for this week's distributions were only 15, 10, and 14. Now, a viewer pointed out that, hey, they're selling some of those poor man cover calls, or deep in the money calls, or leaps, or whatever you want to call them. They're selling some, and they're probably paying you out those distributions to keep them above 20 cents. But that is just an interesting conversation, because coming up for XDTE, you can see what they wrote on a 4-day week again. They're right there at 15 cents. This is in the middle. Now they're doing a little bit better this week on premiums made, but if you go back to the 18th, which is next week's, it's about 15 cents for XDTE, and they did have two go through the strikes last week. QDTE, again, a 4-day work week, because everybody was off on July 4th. They made about 13 cents. And again, they had two go through the strike. Just what they had going on that second and third. But they are looking better this week. So on the Russell, hey, 24 cents, 4-day week. You got to like it. They did have three go through the strike, but that's where they're at. You can see that the share counts have changed a little bit, but not a whole lot. And now they're selling some of those leaps or poor man cover calls. So what it really gets into, they have less strikes to make more money. Don't know the future of these funds, but hey, if you're into total returns, these really do not do that bad. Just pointing that out. Just keep that in mind. Coming up on July 18th, this is what they made in premiums, 15 cents, 13 cents, and 24 cents. What they pay you is up to them, but anything more than that, they did not make in premiums. We're going to move on to some more news and what's going on in the marketplace. And this is just stuff that I'm covering because it's important to me. Now, we look at yield max and we look at a couple things at yield max. Now, I am not a alti fan, just not. I like the alti style, but I don't always like all the stocks that alti has in it, even though I really do like what they're trying to do. They also use the alti style in CEPI, GPTY, and LFGY. So if you want something that is more concentrated, that they can only put stocks in those sectors, then hey, here you have three alternatives than, something that you may or may not want to invest in. Although Alti has gotten better in picking what they're actually writing the calls on. TQQQ, I can understand. Some of the stuff they had before, I just didn't get it, but that's okay. That's me. Everybody's individual, and you guys can pick your own funds that you may or may not want to be in. And none of this is financial advice or any other advice. I'm just pointing out that, hey, CEPI, GPTY, and LFGY, if you're in those sectors, might be something for you to check out. They pay weekly, and they use the Alti style, but are only limited to the stocks in those sectors. Now, Alti, not a fan, told you that already. YMAG, YMAX, and Berkshire Hathaway. I brought these up because I am not a YMAG or a YMAX fan either. Why? Because I just don't like every one of the stocks that they actually pick and put into all of them. So YMAG, really not a Apple fan anymore. Just thought I'd throw it out. Since it's only 7 stocks, why have an extra one in there? Why not just own the other 6? Don't be lazy, do it yourself. YMAX, there is clearly some funds in there that I just wouldn't own. But there are other funds that I would own. So there you have it. And I threw out the Berkshire Hathaway because I'd like to keep an eye on that one, because that might be something for me to add. Maybe. Don't know. Long term, we're going to keep watching it. Let's quickly jump on to FEPI, AIPI, and CEPI. Look at where their calls are. And this is as of July 3rd. I updated it on the 7th. You can see where their calls are. FEPI has really leveled itself out. It's actually moved up pretty good. 2% since 618. That's not that bad. You can see where their calls are. They've gotten capped on Apple, AMD. I can understand that. And you have some movers that have really changed. NVIDIA has gone up 12% since the 18th, and they got pretty much capped on majority of that at 155, so they're not capturing that. That's why I kind of like their new funds from Rec Shares that on NVIDIA, NVII, you still have 50% or slightly more than 50% because how they're actually doing it, and actually able to capture that upside. Just to me, that is why I chose to get out of FEPI and more into some individual stocks, but we're going to talk about that more in a second. If I look at AIPI, again, not that bad, 43.75 on their share price. They're up 1%, 1.25% since the 18th. But you can see that they got capped on a lot of their actual calls. They still have a few more weeks before they roll it. And that's not exactly why I like it, dislike it. I just like getting a little more upside than what I was seeing. CEPI, you can see where they are. So you can see the ones in blue are where the concentration of the contracts are, and you can see that you're getting capped on a lot of them. That is hard to take. Although the fund is doing pretty good, it's up 3% since the 18th. That's not that bad, but the underlyings as an average are up 14%. I mean, Cypher is up 59%. No wonder they got capped. Not much you can do about it when something is moving 60% in an uptrend. That is a large uptrend. Now, I'm going to give you some words of encouragement from other people. Let's look at this. Warren Buffett. Diversification is protection against the ignorance. Yeah, don't be ignorant. Not me saying it. That is Warren Buffett. Charlie Munger. The idea of excessive diversification is madness. It guarantees ordinary results. I don't know. Okay. If I go down and look at these, they all talk about diversification, and that is not exactly how you're going to make wealth. Now, I like diversification because it actually protects wealth. That's where I am in my stage of my life. But at the same time, I still want to be able to stay ahead of inflation just a little bit. That's why I went to my core funds that I'm picked on single stocks just to try to stay ahead of inflation. And I'm going to share how that actually has been doing for me. Now, one thing I do like from RexShares, I like their new funds that are 50% unwritten on, 50% calls. They use 1.25% leverage. I'm also starting to like the Roundhill funds. Keep on watching them, but maybe that is something that interests you if you're looking for a little bit of income in very specific funds. Not all of them, but very specific ones can actually do very well over a long period of time. That is my personal opinion, not advice. Now let's look at Brad's, where he's at today, because I did some buys today, and you can see that I am up total return since I started this little project 4.81%. I'm taking $176 a week to live on because I am retired. This is not theoretical games. This is what I am doing in retirement. But I also got to invest into GPTY QDevo. Got my very first almost full share today of that. I did get some biddy, some BTCI, and I put more cash into Cashy because I'm eventually going to take that cash and put it to work in maybe a different fund. But we'll figure out which one that is later on. I've always said 110K is my limit for Bitcoin. I'm not going to sell. I'm just going to ride it up until I see the next entry point. I'm not going to add. We're just going to go ahead and hold off. Maybe wait for the drop to happen again. I don't know. We're just going getting a bigger bag. Get it back anyway. So baggy, I still hold. BTCI I hold. But I am not going to invest in Bitcoin above 110K. Now, I may add in the Roundhill funds instead. Once it gets above 110K, they pay weekly, and I'm still looking at that concentration on my picks for the future. And I like to do a little more diversification on that, maybe have 10 to 12 stocks in there and have that core diversification of those 12 because those will probably move the market for the next 5 years. At least that's what I am thinking in my little brain. Also, Co2 agrees with me, as well as QDevo and KQQQ and a bunch of other funds. Really are looking at the exact same stocks that I'm looking at as a core investment. Smaller portion of my portfolio, but it's getting kind of large now that it's up almost 5%. So until next time, God bless. And last and not least, if you stuck around to this part of the video, hey, I came out with a new logo. Yay me! Just doing a little update to the logo from what it was before. Just thought I'd throw it out just in case you go, hey, that's changed a little bit. And it was just a little tweak because there might be other exciting stuff coming down that you might be interested in. So until next time, God bless.